to the Pipnotic Symposium on the 30th of October 2024. Okay, so I just wanted to show you a little bit how I'm moving through the pairs every day. And talk a little bit about the election that's coming up and whatnot. So first of all, what I'm doing, as I showed in the previous video, I have my time frame set up in a way that enables me to view multiple frequencies at the same time. And if we go to this here, you can see that here we have the time frames, and here we have the setup. So my higher time frame is a monthly, my entry time is a daily, weekly, 4 hour, daily, 1 hour, 4 hour, and 15. So I have these four frequencies set up on my charts at the same time, and this is really great because I can then focus on many different things at the same time, which I like. So what I do is I'm just grabbing these and putting them over one at a time. This is the dollar, Singapore dollar. Yesterday I had a trade on the Aussie dollar, Singapore dollar, which was a losing trade. I just want to show that trade before we do anything else. Yeah, I was watching this. I just posted this, but I was watching prices here, and I was expecting prices to move and turn from here, which they didn't. And it's my own fault, because when I look at this now, I can see that there was actually a 4 hour area of demand, pretty close. We didn't quite get there, but down here that I should have waited for, but I didn't. I was just pretty confident the prices would turn around from here, which they did not. And so now prices went a little bit deeper. I think my stop was around here somewhere, stopped out, and now it's turning around. Isn't that typical? So this is, yeah, here. My stop was just around, I think around here, somewhere like this. I was just expecting prices to move away from here somewhere. You could see how we had a low here, prices went beyond that, then they moved higher. But looking at it now with a bit of wisdom, 6 o'clock, see this is kind of in late let me think about that. Yeah, kind of after lunch European session. Maybe a New York session just getting started, and so we had like a final push lower in Europe, in the European session, which was where we managed to find this liquidity. So my bad, but that's okay. Losses happen as well. So what I'm doing is I'm just dragging these over one at a time, like so, and I'm looking for where prices are on the weekly chart. I want to see them. I want to know where prices are most likely to go. And looking at this, notice that we are sitting around these highs here. So there seems to be selling pressure coming into the market once prices move up above these areas here. And we're just about there now, but you can see that we have not yet been up there. So I would probably wait to sell until prices maybe wriggle up a little bit. And if we look at that here, you can see what it looks like. Here we have a test, failure, test, failure. And so what I'd like prices to move for the Kiwi, Japanese yen. I'd like them to move up here, to move beyond here before I started to sell. So I want prices to move beyond that before I start to sell. And the reason is because, I mean, people start selling when prices move above highs, and they start buying once they move below lows. And if you want proof of this, you can just move through the price chart. Here we had a high, prices went beyond it, they turned. Here we had a high, prices moved beyond that, they turned. Here we had a low, prices moved beyond that, they turned. Here we had a low, prices moved beyond that, they turned. Here we had a low, prices moved beyond that, they turned. We had a low, they turned. Okay, so this happens all the time. A high, they turned. A high, they turned. A high, they turned. So focus on that all the time. Happens all the time. Here we had one, they turned, they turned, they turned, they turned. Here we had a turn. And you want to focus on swing points. Here we had one, prices came close to it, but they went deeper on this move here. They moved. Another example. Happens all the time. All the time. So just try and pay attention to that, because this is where you want to be positioning yourself. You don't want to be selling in here. You want to be selling up here and buying below here. We've spoken about this hundreds of times over the past 10 years or so, and it's just super important that we continue to focus on that. Okay, so moving on, what do we have here? well, I'm not really seeing anything that I'm interested in. But what I like to do is I like to focus on one of these bigger time frames, which is this one and this one and this one and this one, and I want to see a move that goes up. So I want to see prices moving up and taking out a high of sorts, maybe something like that. See, once something like that happens, prices move above here, then we know that we're likely going to continue to do something like that. So on the higher time frame, I want to see something like this. Okay, so here we can see we had a high. Prices did not close above that, but we did manage to move above, and so it's my expectations, because we moved above this high, that now we are going to begin to move back in until we find buy zones or demand. Here we have a 1 hour and here we have a 4 hour demand. So price is going to move from liquidity that is outside the range of the outside the current dealing range, and they're going to move back into demand, supply and demand, and buy and sell zones within the dealing range. The dealing range being from here to here. Okay, this is the move. So we use the boxing thing. It goes like that. So they're moving from here to here, and when they start to turn around, I mean, this is when we can expect prices to move. But because we moved above here, we could expect the prices were able to feed into some offers here that will essentially cause prices to excuse me, to wriggle lower. Okay, so what do we see here? We don't really see anything too exciting, and I just want to see super clear setups. Here we have a pretty interesting setup. Let's focus on the weekly. So we had, let's go to the daily. It's probably going to be clearer. Yeah, want to be super clear. We moved above here. We moved above here. So this is super strong buying, and we have an area of demand right there. Okay, so I want prices to move there, and I want to test, potentially trade a buy at that area. And if we look here, you can see that we have a zone here, and we have actually a beautiful zone right here, which is actually the 4 hour zone, which is responsible for driving prices above this high. So this is a big deal. So this would be the area that we would expect prices to move to, and this is where we would buy from. And so looking at that zone, I mean, it looks like this. Looks like that. Okay, we actually have a parent-child relationship. We have the parent, we have the child just above. We gapped into that and saw an expansion higher. Okay, so that is telling us that there's potentially going to be some buying around here. So we would wait for prices to come to do what? To move below lows. We want it to come below here, and below here. This is a pretty reasonable spot. This is another reasonable spot for the reasons that we just spoke about a second ago. So this is what I'm looking for. And so when prices come down to the area, you can either have a limit order to buy if you feel confident about the zone, and sometimes the zones are so beautiful that you can have a certain feeling of confidence about them, but sometimes they're not. And so in a situation like that, if I go to the 15-minute chart, let me have a look. Let's just use this area as an example. This one just here. You can either have your limit order to buy, you have your buy, have your stop down here somewhere, or you can wait for prices to come down. So you want prices to move into them. Okay, and you can always, okay, this is something that I often find myself in the situation of, and that is you put the limit order there, prices comes down, and they move through the limit order, and they start to move towards the stop, maybe 30% or 60%, and then they start to get close to the stop. And so you might as well not have a limit order and just wait for prices to tell you what they're going to do. So let them move into the zone, let them find that base. You can always click into these trades at market if you're watching them. Okay, and once they start to do this, they start forming demand. They start establishing buy zones, which you'll see when a zone is created. Like this one right here is a really good example. This is a 1 minute zone where we have a little tiny zone just here. We have the buy zone established right here. So this could be the beginning of the place where you begin to scale in. And a little zone like this, it'll look like that. maybe the buy zone starts around here. And so this is where you would get in. You would wait for prices to come down to that area, and then you would get in, because this is where they'd probably begin to move away. Okay, so an often case, this little pattern just here, or this whole pattern, will actually occur down here somewhere. And so previously you would have got in at a slightly worse price, but had you waited for prices to move down, then you would get in at a better price. Okay, because this whole liquidity exploration happens within the zone. And so I find myself clicking into trades more than having limit orders. And if you look at the trade logs that we've posted, there's probably 80% market orders and only 20% limit orders, or something like that. I'm guessing there's going to be much more market orders than there are limit orders. And so I encourage you to do that. And so what I'll do is I'll just simply wait for prices to move into this little price point just here, and then I will assess. Once it comes in, what do I do? So that's what I'm doing. And for the course material, I mean, it's all in here. If we go to the strategies, I mean, we focus on, we have our directional bias. And so the directional bias is when we go in here and we look at the higher time frames. And you can see here, for example, if our higher time frame is the daily chart, we want to see what's price reacting at. What does that even mean? What is price reacting at? Well, here there's probably something going on, because prices are going up and failing. They're going up and they're failing. That's telling us that there's something over here. So we need to zoom out. We need to see. And you can see right there that we have a sell zone right there. Okay, so prices are testing that sell zone, because this price point here looks like something here where we had a big strong move down. Prices visited the highs and we came down, and then they left. So inside these two candles here where they meet is something that looks maybe something like that, where prices go down, they go up, and then they go down. Okay, so this is the simple version, and this is a slightly more complex version of what's happening just in here. Okay, and so there's going to be a high just there, and so you want to wait for prices to visit these highs. And because we visited this high, and you can see price stalling, well, now this is telling us that we have our directional bias. Our directional bias, which is here, is the market expanding or is it contracting? Well, here, looking at this, you can see we have been expanding. And how do we know that? Well, we know that because we've been taking out highs. We've been trading above those, and we have a dealing range here to here. We're very deep into that zone just here, and we're reacting here, and so it's probably time to contract after we've expanded. And you can see we've had several periods of expansion. We had accumulation, a bigger accumulation. We have inefficiency, accumulation, inefficiency. Okay, so we've had a pretty good run at rebalancing this price inefficiency, and potentially running out of steam because of these price inefficiencies here. And we've had multiple periods of accumulation on the way up. So this is telling us that maybe it's time to correct, which is what we're seeing here. Okay, so going to the smaller time frames on the 4 hour or the 1 hour. On the 4 hour, you can see we had a high here. Let me zoom in. We had a high, negative. We had a run high and a major close below. What does that mean? Well, that means that we've managed to find some offers up here. Okay, these are also above this high. Okay, so this is telling us that we're probably going to start to drift lower to a logical place, like here and like here. Okay, so going to the smaller time frames, 15-minute chart, we would just look for these things to happen. And this is nice. I like this. Here we have, number one, the reasons we should sell. Number one, we have a daily test at higher time frame price price-based liquidity. And price-based because it was that daily bar. Prices went down, they went up, and then they went down. So this is a price-based. Okay, it's not based on a high of a month or a week or whatever. Okay, so that's number one. Number two, we can see liquidity exploration patterns occurring at the entry time frame. How do I know that? We had a high from yesterday, prices dashed above, and they closed below. Okay, that's a good thing. Number three, we want to see supply. We want to see supply form. Supply form or demand be consumed. Oh, it's not easy to write with a mouse. Okay, and currently we don't have, yeah, we have that forming right here. This is a 1 hour zone. If you go to 5 minute, yeah, so what we had here, what we had here is we had a lot happen. Let me draw all of this off. So we had a small zone here. Tested. It's been removed. The area that removed it was here. Okay, prices tested it once. Now it's been removed. The area that removed it is right here, because this is where the test was. Now this is gone. What area removed it? This one did right here. The software found it. So now price is sitting on that area, and we're anticipating eventually prices to move lower. But before that happens, we want prices to seek liquidity. We want to see prices move above some highs, because this is where prices are essentially going to return from. This is an area of supply that's been tested once, twice, 3 times, 4 times, and now it's almost gone. Is this going to hold? I don't think it's going to hold. So this would be a bad place to sell. But what we do have some highs to look at. We have this high here. We have this high here. We have this high here. So this could be a place that prices run to and retreat, or go a little bit deeper and retreat, or go a little bit deeper and retreat. And I'm finding, as a matter of fact, that prices are often kind of moving pretty deep, especially during illiquid times of the day, which is now, which is Asia, which is where I live. And so I would expect prices to move deeper, and eventually, this is going to move into the London Open, and this is where typically we manage to find the liquidity to drive prices in the direction that we expect them. And so currently now it's a very illiquid time of the day, and also this is an illiquid time of the day. These patterns here were created, and so in a situation like that, we need prices to run higher. Okay, so yeah, this is interesting, but it's time to wait. We can expect prices to turn, but there's no reason to think that they're going to turn just yet. So we just keep on going. Go to the Euro Kiwi. What's going on here? Well, this is interesting, where we have prices run. This is the most recent daily run. This is all bullish. There's no bearish candles in here. Okay, we're poking into what appears to be a daily zone. Yeah, you can see the zone right here. Just here. Okay, now we're kind of at the upper edge of it. And so this is important. There's going to be some serious pancakes up there, and so we can expect from now on maybe a bit of contraction as prices move outside the dealing range to back inside the dealing range. So here we want to look for these patterns to emerge, and here we had the high from yesterday. We ran that, and now we are here looking like this. And so what you want to do here is you want to look for prices to move back up to some price sensitive areas, and you can see just here, we have a high. Prices ran through the high, and then they closed down pretty quickly, and so here this is kind of a big zone, but we have something like this. Okay, and we have the sell zone is right there. Is actually right on the high from yesterday, and so this would be the place that I would wait for prices to turn at. Okay, so I'd wait for prices to wriggle up here, and I'd probably put my stop above this somewhere, just in case prices need to go a little bit deeper. Because I'd like you to pay attention to something and maybe have a bit of a test. From now on, instead of putting your entries on, let's find some proper zones, instead of putting your entries on the zones like that, put them below those zones. And in the buy and sell zone, this is called the deep zones configuration, and it jumps automatically between normal zones and deep zones based on the number of candles here in the accumulation or distribution. But and see what happens, because prices often go through those, and this is where they snap back from. So try and have a bit of an experimentation with that, and I think you'll find that there's a lot of merit to that. And so, I mean, if I just go to my alerts, I got tons of alerts. Let me delete all the ones that have been triggered. I'm just going to delete all of them. I'm going to go through all of them. Just remove all of these. You can see a lot of them have been hit. Alright, oh cool, I can do them all at the same time. Great. Okay, so now I go in and I look and I place my alerts on these, and I'm just going to put an alert here. I want prices to tell me when they come back up to the high from yesterday and what they're going to do. Okay, then I go to the next one. Let's go to the Kiwi Swiss franc. What's going on? Let me turn my phone off. Okay, what do we have here? Well, we have this price is sitting on a weekly low. So yeah, the month low from last week, and the weekly. I had this marked off from yesterday. I did not take this trade. I had the zone marked off. Yeah, and this is a really good example. I'm just going to show that this is time-based liquidity, and it's time-based because it is based around the concept that the lows were formed from the previous week and the previous month. Okay, and so you can see that pretty clearly here. So this is weekly, monthly. This is the daily. So this is the week. That's not right. This is the weekly low, monthly low, and daily low. Okay, from yesterday, and this formed below the daily low. And so I thought, great, well, I want to buy here. And for whatever reason, I didn't get into that. This is from today. Yep, so I didn't get into that trade, but prices poked into here. And the reason this is an interesting one is because, oops, let me expand this. Prices did this. We went below the low. We formed this. We went below. We went above. We moved above here, and we formed a really clear area of demand right below price. Right below price in the 5167 area. Okay, we formed a buy zone here, which was tested. That wasn't enough. Prices were not happy just yet. We formed another one, and prices went through that, and they actually went into the area of demand right here. And this is where they turn. Okay, so they had to go to the demand. They were not happy, or there was not enough liquidity, there weren't enough bids at the buy zones for this area of demand. So prices kept going low, and this is often the case. I mean, you'll see that prices, that's why chart patterns, which I don't pay a whole lot of attention to, that's why they're quite telling, because, you know, if prices, there's something called like triple tops or whatever, where price goes up, and then it goes a bit deeper, and it goes a bit deeper. This is why these are quite powerful. We go beyond, and this is where they start to, you know, move supply, sell zone. Prices kind of poke through those, and this is where they move away and begin to continue to move away. It's because every time they move beyond the high, they're met by offers, even more offers, and this is typically where prices turn. And this is just a really good example of that. As we move into the lows from the higher time frames, weekly, daily, weekly, monthly, we go below, we go up, we go a little bit deeper, we go a little bit deeper, we go even deeper, and then we snap back. And then when you see something like this, where you have an area of supply, like here, we have the buy zone, so the sell zone is established, and then prices just consume this supply like that. I mean, that's telling us that this demand is super important. Why? Because it's strong enough to consume this area of supply just here. So we tear through the sell zone and we go straight through the supply. I mean, that's telling us a lot about this zone just here, which we marked off just here. Okay, so try and pay attention to those, because this is what you want to wait for when looking for trades at these time-based liquidity zones. Okay, so we continue to move on. This one's kind of done. I missed the boat on that one, which is okay. Just keep going, because we have so many things to look at that there's a lot of opportunity. And so, I mean, I was kind of looking at this just here, because we had on the daily, you can see it pretty clear, we had a high, and then prices gapped above that, and now I'm expecting prices to react at this zone once they come down. So what I'm going to do is I'm going to put an alarm on the low right there, and I'm going to wait for price to meet my alarm. Then I'll be informed that we are getting close, and then I should wait for these patterns to emerge, which we talk about in here. Okay, so we've talked about the directional bias, turning points at opposing liquidity, and this is it can be time-based or price-based. Time-based if it's the previous week, month, year, daily session highs and lows. Price-based if it's supply and demand, buy and sell zones. Okay, and then we look for step 2. This is what we already mentioned that. Look for supply and demand zones on the daily, weekly, and monthly charts. These are really, really powerful, really powerful. And the tighter they are, the more clear they are, the better, because then we have a lot more accuracy in our entries. And then we have the time-based liquidity. Okay, and then we wait for prices to move into those zones. And if your HG, I've got a bit of a mistake there. But if prices kind of poke into those, then you wait for the entry time frame. The entry time frame patterns to emerge, which we looked at just a second ago. Okay, so we got an alarm on there. We just have to wait for that to occur, and then I just move to the next one. Okay, this Canadian dollar Swiss franc. This is not terribly clear, is it? Looking at this, we're just kind of moving sideways, and so in a situation like that, you want to be trading at the extremes. But I shan't bother with that. I'll just wait. Go to the next one. There's so much to trade. It's just a matter of waiting for prices to give us clear signals. And I like this here. And the reason I like this here is because we had this zone here, which was tested. Prices poked into that, and we closed really deeply into that, actually above the high. That's telling us that we have strength. We had some highs here, and this zone here, I mean, really punch the face of this zone here. Okay, and so I want to know when prices come back into here, because this is when I want to position myself to buy. Okay, this is super interesting. So we'll wait for prices to move back into there. And going on the 4-hour zone or time frame, we can see a little bit clearer. We try and remove some of these zones. Yeah, so we have a couple of things here. We've got this one, which is really clear, which I actually prefer. And then we have a couple of zones on top of each other. And so I would actually wait for prices to go here. I wouldn't take these two, because these are child zones. This is the parent zone. So if prices come down to the 179.78, then I want to be looking for an entry. I don't know if we will. We might, as a matter of fact, stay around here. This is where prices went to just here, so we might come back down to here and have a test here, but we'll wait. I always wait for prices to make a little bit of a deeper effort. Yes, and just moving through the next one. What do we have here? Okay, here we have, so in this time frame, on the weekly, we're poking into daily supply. That's kind of, and weekly supply. This is kind of a big deal. So we don't really want to be buying. We want to wait for prices to break down, and they're starting to break down. They gapped higher, and then we're starting to move away. So we want to wait for that to happen, but we want prices to move above highs before we look to sell. Slowly moving lower. Yeah, we want prices to move, so I'm going to put an alarm above this high. I'm just going to wait for prices to move into that at our liquid time of day. We have not yet happened, so I want to wait for prices to do that. Okay, so I'll be super happy waiting for prices to move above there, and then I'll entertain doing something. Okay, good. Well, that's 30 minutes, so I'm going to stop and go through the rest of these myself. If you have any questions, please let me know, and thanks once again for watching.